Let's talk about the labor market. The Trump labor market is starting to crack, and the latest data leaves very little room for spin. Fresh numbers from ADP show August private sector job growth all the way down to just 54,000 new jobs. Expectation was 65,000, already not a good number. Last month was double that. Weekly jobless claims are up, hitting their highest level since June. That's two bad signs in one day. These are not just the ADP numbers. The Institute for Supply Management's latest survey finds that the services sector, that's the bulk of our economy, expanded a little bit, but hiring shrank for the third month in a row. In other words, the sector made a little more money, but employed fewer people. In other words, businesses are still selling and producing, but they're not adding workers. And that's not what a healthy labor market looks like. The trend has been building. July job openings came in weaker than expected. I told you yesterday that there are now fewer available jobs than the number of people looking for jobs. And then remember, of course, that May jobs numbers and June jobs numbers were revised downward. And Trump was triggered so badly by that he went and fired the head of the Bureau of Labor Statistics a few weeks ago because the data didn't make him look good. He didn't like it. He didn't want those numbers. So we now find ourselves in a very strange situation where the jobs market is softening. Wall Street is betting on rate cuts this month, September. And we are unclear as in the middle of this, we are unclear as to whether in the middle of all of this, Donald Trump is in a position to do anything to turn around the tariff fiasco and try to turn around the entire economy. Trump did not say one way or the other who else he might fire if he doesn't get the rate cut that he wants, although Jerome Powell has made clear they can't fire me. I'm independent here. And overall, the amount of pressure that Donald Trump is putting on the Fed to lower rates is wacky. Now, I think it bears repeating once more. Trump, on the one hand, is saying the economy is better than ever. But on the other hand, he's just demanding massive rate cuts that you would normally only see in really bad economies. Trump's like, the economy's great, but the Fed should act as if it's not and slash rates 3 or 4 points. The reality is you cannot bully the labor market into looking better. Companies have to hire people. That's the only way. You can't fire your way into job growth. You can't hide weak numbers by attacking the people who just calculate the numbers. And under Trump, we are seeing slowing job growth, layoffs creeping up, and the people in charge of the data being fired because they are not Trump loyalists insofar as they aren't willing to cook the books to make Trump look good. So these are not just cracks. These are widening canyons. And if the numbers keep going in the same direction, in 6 months, the situation will be very bad. Oh, David, you sound like you're wishing for that. I am not. Listen, I am not a guy who times the market. I don't short stocks. I don't bet on the market declining. I dollar cost average into index funds and just keep buying. You could say, David, I don't know exactly what your political, forget about it. I'll tell you what my financial motivations are. I am long the market always. I am never betting on a decline. And so I don't want this to go in that direction. And I hope that it doesn't.